The Powell comments were interesting, maybe not all that surprising, but there is still a deeper, widespread hope, Veronica, that rate cuts will be in the offing sometime later on this year. Is this your base case scenario, or is this pretty much done right now for holding rates where they are?
Yeah, no, I mean, I do think we are looking at the next move to be a rate cut. That is still our base case. Powell did sound pretty similar to what we heard from him at the press conference a couple weeks ago. We are still expecting rate cuts. We're expecting the first one to come in July. I think the bar for slowing inflation data for the Fed is relatively low. They do think rates are restrictive, and they are looking to cut to maybe support the labor market side of their mandate.
If they are so restrictive, Veronica, why aren't we seeing inflation come down faster? And why are we still seeing the jobs market as resilient as it has been for the last several months and quarters now?
Yeah, I mean, I think there is a lot of stickiness, of course, still to inflation, a lot in services. There's maybe some measurement issues. Maybe we were measuring inflation a bit too low in the second half of last year, a bit too high in Q1, and the truth is maybe somewhere in the middle, and we're more at like 2.5% to 3% inflation. But I do think we do see signs that the labor market is finally starting to turn. Chair Powell has mentioned some of these indicators himself, things like the hiring rate, which has come down. Demand for labor, which does seem like it's coming down, and it is almost only a matter of time before we see that maybe show up in some softer overall jobs numbers.
The jobs numbers are also about not just the headline number of jobs created or lost, but it's also about average hourly earnings. That has been viewed as a very key point for a lot of policymakers and economists to look at. Are Americans still okay making the amount of money that they are given the inflationary picture? And are hourly earnings going to be something that we have to watch for with any jobs data that comes out?
Yeah, wages are still a very important part of this puzzle, and we've seen average hourly earnings wage growth that is kind of stuck around 4 to 5%. It is maybe very gradually starting to ease some, but of course with inflation that is still something closer to 3%. That's not a very strong pace of real wage growth, and I think people are feeling that a bit. Savings rates that are very low, especially maybe for some of the lower income earners.
We've also seen some data out about credit card spending in the last few weeks or so. It seems as though Americans are spending a lot more on credit cards. Is that a concerning development for us, or are we seeing those savings dissipate, as you point out, and are we seeing people try to bridge the gap by going into debt?
Yeah, I mean, we have seen savings very low, credit card delinquencies that are rising, auto loan delinquencies that are rising. The level of spend on credit cards is, I think, just reflective of, consumption is still pretty strong. Also at 8:30 this morning, we're going to get retail sales data, comes out at the same time as CPI. And we are expecting that, maybe good spending is starting to slow a little bit. We saw that in Q1.